Say goodbye to long hours of trading. With this scalping strategy, you'll be making fast profits in no time. So, what exactly is scalping? It's a trading strategy focused on making small profits from frequent trades within short time frames. Sounds simple, right? Well, it can be, but finding a scalping strategy that is not overly complex and can be easily implemented by traders can be a challenge. How to identify swing high and swing low correctly. When the market makes two consecutive higher highs and higher lows, or two consecutive lower lows and lower highs, it is considered a swing. Swings come in all different shapes and sizes. You can identify all of them by using the simple rule about consecutive higher highs and higher lows, or vice versa. Like most things in trading, the easiest way to get a handle on this is to view examples. Remember, we'll have an exercise at the end to make sure you understand this properly. Here, you can see a typical bullish swing. Notice that we have two consecutive higher highs and higher lows. Thank you for liking the video. Let's go to the most important strategy from which you can learn a lot. Bullish swings are blue, and bearish swings are red. Notice towards the end of the swing, there is a surge down where a lower low is created. However, there is no consecutive lower low after that, so it remains a bullish swing. Let's take one last look at some real charts to highlight the swings. Each time a move down makes two lower lows and lower highs, we know it's a separate bearish swing. We know it's a bullish swing each time the currency starts moving up, making two consecutive higher tops and bottoms. They continue to count as one swing until a separate swing forms in the opposite direction. Many times, the market will make a new high in the midst of a downtrend. This is just a fake and does not mean anything unless there is a higher low after the new high and then another higher high. Notice the market surged up to make a new high. It was followed by a new low in the midst of a downtrend. So we ignore that high and include it as part of the bearish swing. Using the correct swing to increase profits. Now that you know how to identify the correct swing on a given time frame, use this information to become one of the most successful traders in swing high, swing low trading. When it comes to swing high, swing low trading, with every loss, you can trade in for a win that is of huge significance. Just increasing your win rate by a tiny amount, assuming all else remains equal, can completely reverse your results as a trader. I hope this article illustrates the connection between identifying market swings correctly and the ability to win a high percentage of your trades. You can have these options along with swing high and low. Then we need the help of the stock stick indicator. Because this strategy is always alive, if you can use it, a buy signal will be obtained, the price will make a new low in the upward trend for a pullback or to our resistance range. If it goes below our 0.5 FIBO, it means we have a block order range below 0.5 FIBO, which can support the price very easily and strongly, which means we have to see a structural change in the range itself. If the price reaches the range, if the price does not reach the range, it returns to the lower range, you can enter into a risky trade. Thank you for watching the video so far. I hope you can make the most of it. Watch the video related to the strategy.